So after about a year and a half, the IPO hype is sort of back. If you remember back in the day, 2023, 2024, I think it was where almost any IPO you bought, you're going to make money. And then we had like a year of like quietness and then slowly picking up. And one company that is spearheading this quote-unquote revival is THMY, which is a company we covered a few weeks ago. You can check out the video somewhere here. But why is this the case? Is it because like people are starved for return, so they're trying to get it into the IPO?
Yeah.
Or are the IPOs itself actually becoming more attractive?
Yeah, so this is a company specifically that is related to the AI space. So there's this analyst which is coming from, they basically say that this is the most undervalued tech companies that is riding on the AI boom. Yeah, that's what they claim. But if you watch our IPO watch video, you know that this company is essentially like an EMS company. They just like assemble those ICT and also FCT kind of like products. It's nothing too revolutionary. It's very simple products, but maybe the customer that they are serving is very big or very well known. That's why the market likes them. But anyhow, this company essentially went up on the first day when it went listing, right? So if you manage to get their IPO, which is 31 cents, you could have 3x in just like a few weeks only if you held it. So yeah, congrats for those who got the IPO. Now, the second company that also went up, even though it's not 3x, but it's close to it, it is Cheating. So this is a company that is related to the power/data center kind of like hype, or data center, yeah, correct, kind of hype. So this company, their IPO price is about 36 cents a share, and then at its closing, or at least the latest price point, is about 84 cents. But at one point, it was up about 96 cents. So yeah, it's still a pretty success hit for Cheating IPO. Now, if you look at the recent IPOs company, right? Yeah. So September to October, all of these companies, JS Solar, Express Power, Camaro, then the mentioned companies, they are all in a profit on the first day itself. So far, that's the reason why a lot of people decided to hop on to the IPO train again, because these few companies are in the positive. But if you look at between March to July 2025, right, the hit rate is actually very low. It's about 28.57%.
And I think most of it is more recent, right? I mean,
yes,
it's the
exactly.
recent that's skewing and increasing. That means before that, it was like...
It was dead. It was pretty...
rate,
Nobody wants to buy IPO stocks, because later we'll mention why. Then the miss rate is about 61.9%. This is also huge, red, not say red flag, but then not a good place for you to put your money in. So the reason why the miss rate is so high is because if you guys recall, around February to April, that's where the time where the market's volatility is at its all-time high because of Liberation Day, and Trump is basically initiating those trade wars against everyone. So essentially, it impacted every single company out there. I don't care whether you're export or you're domestic, because there's not much of the information and data. That's why people are very spooked. Yeah, and it's also the reason why the IPO stocks also didn't do well, even though during June, July, there's also still some sort of like skepticism, like people don't want to buy IPO stocks. Now only there's some sort of like, positive signs that his tariff or trade war is actually not so serious. Yeah. So the few key industries that are hits are actually related to the tech, software, solar, data center companies. So these are the companies that you have known already lah. I mean, this thematic has been the talk of the show since 2023 already. So if you have bought these IPO stocks that is related to this industry, you most likely will be making a profit. And then the last but not least, why recently the hit rate is so high, is 100%, right, is because I think the management or the underwriters, they actually put like a very low to fair valuation as compared to previous. Because previously they thought that you can maximize the valuation of the IPO hype, right? But in the end, that didn't work out. So they are being more careful with their valuation, and they just put like a very fair or too low valuation. And there will be a few more upcoming IPOs. So we have Sarawak Insight Analytica. So this company is like a software related company that does like solutions for water management and intelligent asset management. It's a very complicated business. We tried to study about it, still don't quite understand. But this company, it is trading at a 10.4 times.
Yeah, for a tech sounding company, right?
Yes, exactly. Which happens to listed today. Actually, today we're recording on a Monday, and we're going to be talking about the share price later on. Then the second company we have over here, which is Power Technique. So they will be benefiting from the Johor, Singapore, SEZ Special Economic Zone, given its Kulai base. So this company, their valuation is quite of a premium. So they will be trading about 17 times. And what they do is basically they install and maintain crane, hoist system, as well as an elevator platform system. It sounds like a very boring business, but we shall see whether these Johor, Singapore kind of like catalyst, can it push up the valuation even further or not? But so far, I think most likely during IPO, I think maximum is going to go up like 10% only. That's my prediction. And last but not least, we have a poultry business. After for so long, right? Right now, got a new company that wants to go for listing, which is Farmira. So this is a company that is also going to be trading at about 16 times price to earnings ratio. A pretty expensive valuation in my opinion, because if you look at other poultry business, right, they're all trading about 2 times to 5 times price to earnings ratio. So yeah, it's very optimistic for them to go at such a premium valuation. And yeah, you can see this is one of the research by Kenanga. Basically, they say that Insight Analytics, which is the Sarawak company, right, the software company, they gave a TP of about 88 cents a share. So that is about more than 2x already. And if you look at the open market, it didn't go up to 88 cents, but the highest they went was 73 cents a share. But it's still very decent.
Yeah, it's just very bullish, right, in general.
Yes, exactly. Right now, as of the closing price that I last checked, right, is up 88%. But anyhow, if you manage to get this IPO stock, congrats. It's just take it as like a free money for you or easy profit. Yeah.
If you sell.
Yes. So yeah, the final thoughts over here. This is definitely a signal that bull market is ranging. Yeah. We talk about this in our couple of our videos.
Yeah, it's just 1 month ahead, right? We could see the signs already before what's happening now.
Yes.
And it always follows a cycle, right? Because this year, generally, Malaysia has been down and Singapore is up. But if you remember in 2024, it's the reverse. So, never get too caught up with ups and downs and highs and lows, and then have like a wider perspective, right? That's why a lot of people are panicking in Malaysia because of how quote unquote bad the market is. But certainly things looks like they're on the up. Now, it could change, instantly. But certainly IPOs is sort of like a good signal, right?
Yes, exactly. Okay, the second key point is obviously if you want to buy any IPO stocks, you need to buy those that have a good catalyst. That is basically how...
Good story.
That's basically our strategy. Obviously, you want to ride on good stories. Or at least the story is convincing, or there is some sort of like money that is being poured into that industry. So what are the industry that is exciting? We just mentioned a few minutes ago. So there's data center, tech, software, maybe even solar, EPCC. So far, these industries did well when they went for IPO. Last but not least is whether you should exit or should you keep your stocks that actually went up, right? So there's actually a good example over here, which is Opstar. So Opstar was listed around March 2023.
Fantastic story. Yeah.
Also fantastic story. They are doing the IC related kind of industry. So they are more on the front end of the semiconductor value chain. And when it went for public, right, on the first day, it actually went up. So the highest it went was around 2 ringgit and 50 cents, if I can recall correctly. And the IPO price was 60 cents a share. But since then, the share price actually start to like drop, just falling down. In fact, it actually dropped about 78%. So why did they drop is because they failed to deliver quarter on quarter. So if you look at the numbers, right, they have been loss-making every single quarter. And also they have been struggling to get like new contracts from their customer. So that is the key thing that you need to know, is whether can this IPO company that just listed, right, can they continue to deliver the numbers? I think that's very important, especially for this company, which is MY.
I mean, historically, IPOs have performed really well in the first 1 month or so. Will be down or flat for at least 2 years in my experience. Of course, now the one company that's bucking the trend is 99 Speedmart, right? They did experience some decline, but then now it's going up. So I would say that there are some exceptions, but generally, why is like Farm Fresh, why is 99 Speedmart, making a strong comeback, right? Faster than, let's say, because, within their industry, they're a lot rarer, right? They're more unique. Whereas in Opstar's case, right, it's not to say a red ocean, but there's a lot more competitors and they don't have the same kind of uniqueness of a 99 Speedmart in their industry. So if you want to hold long term, usually you want to focus on companies that have that, right? There's something rare about them. And those that do not have it, you can still take advantage, because if the story is great, the price can still go up. However, you probably want to have a shorter term mindset for those kind of companies. So this is just a general overview of the kind of companies you should hold on and the kind of companies that you can, exit faster.
Yep, exactly. Just like MJ mentioned, there'll be some of a key exception. So another company that we have covered inside our FIRL Pro, which is Southern Cable.
There you
group.
go.
Yeah, so that company, once it went for public, right, it actually went down quite a bit. I think it's like 20%-ish. And then it was flat for almost like a year until like late 2023, 2024, when there's some sort of initiative by the government where they're going to be spending more money in terms of grid modernization. Tenaga also is going to spend their capex. That's where Southern Cable start to regain their footing, and they got more and more, orders from them. And that's why the share price eventually went up triple to even quadruple after that. So yeah, that's very key for you guys to know. Obviously, number one is valuation. You need to take note on that. Number two is whether can they continuously get more orders from their customer. That is also another key thing to know. So yeah, that's about it for today's video. And here are some of the FIRL Pro updates that we do in every single video. So far, our returns are pretty decent. And if you're wondering what are these three companies over here, they are
some of our winners, some of the companies that we've covered some years ago, some just months ago, like Kellington has been around for 3 years, Velesto and Futu both about less than 6 months. Velesto is the newest addition, right?
Yes.
So, we have different type. All these three companies are actually part of the model portfolios that we have. Kellington Group is part of FPM, this is the Malaysia side. Futu obviously is part of the global portfolio. And then the boring portfolio, which is more for like dividends, Velesto is part of it. I think we talked about it, started talking about it and sharing it with our members at 18.5, 19 cents, somewhere there. And so far so good, right? So these are the kind of companies we are looking for. They may not be in the news a lot, right? Like these companies, you don't hear them a lot, right? You hear about Nvidia, but you don't hear about Futu. You hear about, whatever hot IPO, but, Kellington or Velesto is not something that probably comes under your radar. So that's what we do. We're looking for companies for our own, portfolio that we think potentially undervalued or, interesting. And we're just sharing our findings, right, with you. We don't tell you to buy or sell, but we just want to share with you the research so that you can make a more educated decision. Many of our members actually disagree with how we, some of the companies we look at, they agree with some of them. Everybody has their own opinion, which is actually a very good thing. And that's what FIRL Pro is about as well. There's a community. We put forward a particular research write-up, and then people look at it, and then they critique it. They say, hey, have you considered this? Have you considered that? Similarly, if somebody has an idea inside our group chat, we will also give our views and critique. And at the end of the day, it's all about advancing your research capabilities and eventually, your own wealth. So if you want to get a taste of what's inside some of these write-ups, go check out the free sample. And if you have any questions, you can always just email us at hello@firl.co for more details. And if you want to hop on to FIRL Pro, just let you know, we have a money back guarantee. So once you pay for it and you make sure you apply the 10% discount code, if it's not ready for you, within 10 days, money is back in your pocket. No questions asked. And with that, I'll see you in the next video. Bye-bye.